Hello my fellow freedom builders and welcome back to the channel. Today I'm going to show you a stock that I plan on investing in today, depending a bit on how the day pans out for it. It came out with earnings yesterday. They were surprisingly good and therefore the stock will probably shoot up a bit today. I am using my stock scanner. It's not out to the public yet, but I'll put a link in the description below the video here. So if you want to be on a waiting list, just type in your email and everything will be fine. We'll send you a note when everything is ready. Now, what I'm doing here is I'm looking at some value scores, quality scores, momentum scores, and stock scores. And basically, I have just sorted for the overall stock score here. And the stock that I have picked out is the Lennar Corporation. That is, as you can see, a residential construction, and there are some structural issues. There are some sector rotations that are coming in. We have some interest rates that we should consider. Yesterday, the interest rates from Fed were paused, which was kind of great. However, Fed said that, or Powell said that we might see another 2 hikes this year alone. Honestly, I don't believe it. Fed and Powell have been just wrong basically every time they were talking about future interest rates. So I don't think we'll see any more hikes this year. But again, I'm not an employee with Fed, so how do I know? It's just that they have a history of being wrong. However, interest rates can do a bit to the residential constructions. But I will show you today how I'm planning on trading this so that I have next to no risk on it. First of all, it's a good solid stock. It's scoring high on both value, quality, momentum, and the overall stock score. So that is great. We can see that the long-term trend is upwards. We can see that the weekly trend is upwards. And then we can see that the daily trend is pointing downwards. That is not something that concerns me too much. If we're looking at this is just a very nice trend. Often I do, if you've seen my videos before, that if I were to draw some sort of a trend line, that is a bit subjective and I'm not completely certain where it should go, but I can choose a regression channel here. That is simply a statistical regression line and then 2 standard deviations on each side. If you have no idea what I'm talking about, I might make a video about this in the near future. But just so that you know, this is drawn absolutely automatically. It is set to start at 118 today against 114.75 yesterday. And what I am going to do today when I buy this is a bit of I don't know if you can call it a trick, but I'm using options. And I'm using this on a larger portion of my portfolio since it is extremely low risk. I know that I'm also cutting a lot of the upside potential, but what I'm basically doing is this. Let's say that I am buying the stock at 118 today, around here. Then, of course, I could risk it to drop. What I sometimes have done, if we are in a very strong bull market and I think we will continue, I have sold a covered call. For instance, up here in 125, meaning I'm getting a premium up here to sell it, but I'm also capping my maximum profit here. If it goes to 100 or above 125, I'll have to sell it at 125 no matter how far it goes up. So that is why it's called a covered call. I own the stock, so I can just give it away to people up here. I'm not basically losing money on it, but I'm taking the profit from here to here, and I'm taking an option premium. Now, what I'm going to do today is that I'm going to sell what is called an in-the-money covered call. Actually, it's a deep in-the-money covered call. And what that means is that I am selling, it could be something about 100 here. I'm selling someone the right to buy my shares at 100. And you might think to yourself, he is not that well in the head, because why would he buy 118 and sell at 100? That makes no sense. Now, the way options are priced is that there's something called intrinsic value and something called extrinsic value. And what happens with intrinsic value is that when I sell an option, let's say I buy 118 today and I sell a call option about a month out in time at 100. That means that I get the intrinsic value, and the intrinsic value is from the price I'm paying and down to the area here. So basically I am getting $18 for the option times 100 of course, but I am also getting a time premium for the next 37 days, so I'm also paid for the risk. Now this might sound completely Chinese or Russian or whatever to you. Again, I will make it in more and more of my videos so you can see how I'm doing this. But that means that basically if this comes true today and I buy at 118, I sell an in the money covered call at 100, I get $18 and then some for the risk, because my risk of course is that first of all it can go to the moon and then I have lost all the upside, but it could also drop down to, for instance, 95 down here. If that happens, no one of course wants to buy it from me at 100. I'll still keep all the option premium, so I haven't lost this entire span here, but I will of course have lost the 95. Now if I succeed in this trade today, I will be making let's say I buy 100 shares of this will be 11,800. I will be making somewhere around $120 to $140 on this option trade if I just buy 100 shares. That means that I'm making a bit more than 1%, and the expiration date is, let's just have a quick look at this. Let's have it over here. On the daily time frame, it is Friday the 21st. So what my bet is, and that is because this is a good solid stock, they are earning well, we can have a look at that in a second, but my bet is that it doesn't drop below 100 within the next 37 days or something like that. If it does, it's a stock that I'm not too scared of owning, but I basically have, if it starts at 118 here, it can drop 15% without me losing a cent on it, simply because that someone has paid me all of this money plus a time premium, so it can basically go down to 99, 98, something like that before I start losing money. That is an in the money covered call. Not too many people use that, and it is something that I use to make somewhere between 0.7% and 1.2% per month on the stocks that I'm doing this on, and I'm doing this on a regular basis. So I'm basically making about 1% per month on the trades here. There are a few times that they drop below, but if I stay clear of earnings, dividends and so on, it is not that bad. Normally what I also do is I just check the different websites. In Seeking Alpha, for instance, we can read something about how solid and stable this company is, and we can hear different opinions. Now, I'm not doing this actually to invest from other people's opinions. I'm more doing it just to make sure that I haven't missed some major lawsuit or something like that that can trigger the stock to plummet. If we look at it here, just on our TPI chart, we can see it's in a good long green trend. It has tipped up in green trend on the weekly, and it is in a red on a daily, but that is not too bad. On the value chart, we can see that if the investors are willing to pay the same average PE over the next couple of years, you can see the average PE here is 11.8 over the last 10 years. The last 5 years, they have been paying a PE of around 8 and 7. So they're willing to pay a smaller and smaller price earning over the last couple of years here. If we take the 10 years, there's a bit of a margin of safety here. If we go down to the 5 years, there isn't. It's not that good of a value play if we're looking at the 5-year time span here. But I'm not too worried. I'm basically just looking for stocks that are not, let's say I bought here and the stock price the stock price was up here and the fair value was down here. I'm looking for something where it wouldn't be cut in half if people all of a sudden realized it was undervalued. So this one actually looks fairly okay. The summary on it, they have return on capital on 16%, return on equity on 19%, and operating margins of 20%. Have a great Petrosky score. Estimates, analyst estimates are somewhere between hold and buy, so that is also okay. So basically it looks okay. The free cash flow per share is going up from last year to from 21 to 22. We haven't gotten the 23 numbers here. And we can see the return on capital here is dropping a bit. But this is not something that I'm really concerned about. This is more to make sure that I'm not buying a complete dumpster fire that easily drops 15% over the last 30-something days. So you can follow it yourself. Just be aware that the reason I buy it is I'm buying a reasonable solid stocks that I don't think will drop down here. If it should happen, I don't mind owning it here, and I can trade out of it via different option strategies, or I can simply just sell my stock with a little loss. But when I look at an option calculator, the risk of this one going to 100, let me just see on my other computer here, there's a chance of profit of around 94% when we look at option statistics. So it would only be 1 in 20 times in scenarios like this that I would actually have to do something about that. Also, if you're trading trading options and the stock starts to move down here, what happens with an in-the-money option is actually that the intrinsic value drops, meaning that you can buy it back at a lower price and then you can actually roll it further down and out. That can be done sometimes. So maybe if the stock starts to slide downwards and a couple of weeks before we are down here and I'm not interested in owning the stock, then I might be able to roll it out a month more, maybe roll it down to 92, and then all of a sudden it should in these couple of months actually drop to 22%. And if it does, I just own the share at this price and it would be even better value. I hope this makes sense. As I said, I am using the My Stock Scanner, I'm using Seeking Alpha, I'm using several other news sites, and then of course I'm using TradingView as always. Alright, that's all for now. I hope this was some sort of inspiration for you, and as always, feel free to ask me questions below the video. Take care of yourself and your money out there, and I'll talk to you again shortly. Bye for now.